morning and welcome to this week's Market Carver. Hope you have had an outstanding week. Obviously, the markets have had a roller coaster. Going into late last week, we woke up Monday morning with the futures down, China off another 7-8%. More and more challenges that were going on there created a lot of turmoil. People woke up Tuesday morning to the futures being way up. The Bank of China intervened over the course of the night, cutting interest rates and also adding a little of liquidity to the marketplace. So Europe was up across the board, even though China was off another 8%. And everything looked good in the U.S. markets, but as the day went on, especially at the end, the S&P 500 ended up closing back at the low that it was yesterday. Now, when we talk about this from a technical level, that's just purely price action. Andrew pointed out in the allocation meeting on Monday that this is a normal part of this process. When you have a market that falls that sharply, you're not going to normally have a V that goes back up. As we look and listen to commentators and different conversations, it really does boil down to the three big stories. Currency, which by the way is improving. The euro is actually rising against the dollar. Again, a lot of people think that that's strange, that you always want a strong dollar. From a standpoint of our companies that export, having our dollar come in a little bit against the euro is actually very, very positive for our economy. As I said, the euro region was all very green this morning coming in. We'll see where they ended up closing at, but things were looking better there as China's economy felt like they were going to have a more competitive basis, if you will. So first is currency, and we all know China 2 weeks ago reduced the value of their yuan. The second thing, of course, is dealing with their Chinese economy, the fact that it is slowing down. And we talk about this at a lot of the thirdlies and a lot of meetings. Remember, an economy is the mass of everything, and you can be a great economy and get worse or have negative trajectory. What markets are always worried about is that trajectory. It's the rate of change. Are you improving from where you were, or are you declining? It's not the mass that you have at the time. China's economy clearly is not growing as fast as it once was. That is challenging for its market. It's the second largest economy in the world. That's challenging for all of us. So we're going to have to let this play out a little bit, if you will. Last but not least is oil. Early today, energy got a bid. You started to see the value of oil come up this morning. That didn't end up holding out throughout the course of the day. Now here in Indiana, a lot of us are surprised that our gas prices are still high. Remember, that's coming from a refinery, not from the price of crude. The price of oil very much does matter. So there's a lot of stories that are out there, a lot of pundits that are talking about where the market's going to be, whether we're in a correction, which is the market falling by 10%, clearly we're there, or whether we're really getting ready to go into a bear market that has a lot more of a drop to it. Right now, this appears to be a very normal and healthy correction to us. Got there very, very quickly over a few days, but so far things under the hood look okay in some of the price action we saw. Now I will tell you, as we've reported on this show on the Market Carver several times, you had two conditions that concerned us from the technical level. One, mutual funds had the least amount of cash that they've had since we've been tracking it, which meant as you had sellers, the mutual fund companies had to redeem stocks to buy cash. They were going to naturally pick the high flyers, and that's what we saw. Second was that lack of breadth. When a market's going up, you want to see large amounts of participation, a bunch of companies doing well, and that number had been dropping quickly. Even though the market had been making new highs, we had less and less breadth or market participation. We'll be watching from a technical standpoint to see if that improves when the market starts going in the right direction. In the meantime, if you've got any questions or comments, feel free to shoot us emails. Call us. More than happy to talk. We are busy working on this, and we'll continue to monitor it for you. If you're out and about, you can hear a little bit more on the radio show on Saturday morning, 9 to 10 on WQME, 10 to 11 on Shine 99, and of course Thursday afternoon from 4 to 5 p.m. Have a great week. God bless. We'll see you again soon.